Hi, a simplified chart for 5 types of accounts. This is a simplified chart of 5 types of account where all accounts' original places, along with actions in increase and decrease, are there. Let's see each account position as far as the balance is concerned, treatment in increase and decrease. Asset. Original balance position is debit. This is the debit side. And when an asset is increased, it is debited again. And when the asset is decreased, it will be credited. An expense. The original position of the balance is debit. When the expense is increased, we debit it, and when it is decreased, we credit it. Now comes the liability. The liability original balance position is credit. When a liability is increased, we credit it, and when the liability is decreased, we debit it. Now comes the capital and equity. Its original balance position is credit. When capital and equity is increased, it will be credited, and when it will be decreased, it will be debited. Now we come to the revenue and income. Its original balance position is credit. So when revenue is increased, it will be credited, and if the revenue is decreased, it will be debited. Now we come to the slide where it shows debit. It's very clear the assets and expenses are debited when they are increased, and liability, equity, and revenue are debited when they are decreased. Same way, if we come to the credit side, when we credit a liability, equity, or revenue, that means they are increased. And if we credit asset and expenses, that means they are decreased. One more chart here which will show you accounts to record an entry in accounts, how we treat the entry in accounts. Assets. When increases, it will be debited. A decrease in asset will be credit. Liabilities. An increase will be credit. A decrease will be debit. Equity in capital. An increase credit. A decrease debit. Expenses. An increase debit. A decrease credit. Revenue and income. An increase credit. A decrease debit. Now, one more example to understand as well. Equity or capital. If you debit the equity or capital account, this is a T account, and the left side is the debit and the right side is credit. So when you debit the equity or capital, that means decrease. When you credit the equity or capital, that means increase. Same way, any asset account, if you debit it, that means increase. When you credit an asset account, that means decrease. Any liability account, when you debit, that means decrease. When you credit, that means increase. Any expense account, when you debit, that means increase. If you credit an expense account, that means decrease. Any revenue or income account, if you debit, that means decrease. If you credit, that means increase. Thank you for joining and see you in the next video.